If we don't know why they're taking money from us as opposed to XYZ other funds, then we probably shouldn't be doing the deal.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Dan, thank you so much for joining me today. Super excited to chat with you. All right, Dan, you are the co-founder of Nascent, which is an early stage venture capital fund focused on the Web3 ecosystem. Previously, you founded IDEO CoLab Ventures, and you also co-founded the MIT Bitcoin Club, which is pretty incredible. So going back to that MIT Bitcoin Club, going through your LinkedIn, it looked like you founded it in 2013, which is outrageous. So tell me about that, because that is extremely early for everyone in crypto. How did you learn about it? How did you decide to found this club? Like, what was that like?
Yeah, well, I think at the time it didn't feel early to me. It felt like there were already people who've been doing Bitcoin for a few years prior to that. That got started when I was a grad student there. So I was doing my MBA at MIT Sloan. Started the MIT Bitcoin Club because I wanted to find the other folks who were interested in Bitcoin at the time. And most of my classmates thought it was crazy. There were a few that came to meetings, but I was kind of the crazy Bitcoin guy at the time. But it was great. I was very lucky to meet my co-founder there, Jeremy Rubin, who was an undergrad, and he'd already been doing some stuff in Bitcoin. And we did the MIT Bitcoin project, where we raised some money from donors and were able to distribute $100 in Bitcoin to all of the MIT undergrads. And
that was you?
2014. That was me and Jeremy. Yeah.
No way. I've heard about that for so long. I can't believe that. That's amazing.
Yeah. So that was a lot of fun. We were trying to build up the ecosystem at MIT. We really saw Bitcoin as the future, and so wanted to get really smart, technical young people involved early in helping shape that technology. So it was an awesome experience there.
That's incredible. Okay, so take me back before that, because how did you learn about Bitcoin? And you mentioned you felt like you were late even then, which is funny. I feel like everyone you talk to that's in crypto is like always feels like they were late no matter when they got in.
Yeah, it doesn't matter when you enter. You're always late compared to everybody you meet at the time who's been in there before you, right? So I actually don't remember the first time I heard about Bitcoin. I know that I had this like latent awareness of it and as this like kind of fake internet money. And it seemed stupid to me. And so it was the spring of 2013. I think Bitcoin had spiked up to close to $300. Again, I was like, wait, why are people giving real dollars for like fake money? This seems dumb, but like if it's happening, I've got to learn about it. So I started reading, and I read the Bitcoin white paper, and it started to click for me. And it's like, okay, I think a lot of the people at the time were coming to Bitcoin from this like, end the Fed, Bitcoin is the future of money. And that was not at all the angle I was coming at it from. I was coming at the angle of this is financial technology. So I was looking at it as an open payments platform. I'd spent time, I was working in microfinance at the time when I got interested in Bitcoin, and spent time in East Africa, Southeast Asia, Latin America, and was seeing these mobile money systems that were just starting to catch on. And this was around like kind of 2010 to 2012, 2013 timeframe. And at the time, as these networks were growing, they were all done by the cell phone companies, and you couldn't even send payments consistently cross-carrier, let alone cross-border. And so Bitcoin clicked as, oh wait, this is an open source protocol. Anybody can use it to send value anywhere in the world without a middleman. And that really resonates with me. I said, okay, right now, this is something that it's confusing. It's hard to use. It's got a volatile asset attached to it. But this looks like classic disruptive innovation, where you're seeing something that's not good for most people, but it's going to get better. The UX is going to improve. People are going to understand it. Network effects can grow. And then you've got something where there's zero marginal cost for onboarding a new user to a global open payment network. Like that's what got my head to explode. And I was very lucky to meet some really smart technical people like Jeremy and others who really helped me go down the rabbit hole on the tech side, understanding how it worked. And it was so cool. And so I started getting interested in it as this technology platform. And from there, I got to be honest, I was a little bit late to Ethereum and understanding, because I got stuck in like Bitcoin maxi land for a little bit. It was like, oh, all this stuff, you can do that on Bitcoin. We'll use colored coins. We'll use Lightning Network. We'll do all this stuff. when I started coming around to Ethereum, and I guess it was really into 2017 and into the ICO boom, which I was like, most of these tokens seem like BS. What's going on there? But really going to ETH Denver, that I think was the very first ETH Denver in early 2018. That's when the broader, okay, we can get DeFi, we can do all of these things, and that's how my kind of exploration of the space started to evolve.
That's amazing. Okay, so and I don't know if this is correct, but were you inspired by, or did you kind of understand Bitcoin from the M-Pesa?
Exactly. So actually, I was initially a volunteer with an NGO in Uganda, and one of the other volunteers that I was living with had written her doctorate on M-Pesa. We called her Dr. M-Pesa. And so she was kind of my exposure to what was happening with M-Pesa, and was saying, whoa, like, this Bitcoin seems so much better, other than, okay, they've got amazing distribution. It's using, shillings right there in Kenya. It made sense for people there, but you want to go broader, you want to go global. Hey, Bitcoin makes sense. And now I think we've seen it's not just Bitcoin. Stable coins, especially dollar stable coins, are really kind of flooding the world, but we'll see other currencies. And I think the Bitcoin as a store of value is a narrative that I think makes a lot of sense and resonates with me now. But I think a lot of people early on would get caught up around this idea where people are saying Bitcoin is the future of money. And it's not money in the sense that most people think about money. It's money in the sense that gold is a form of money. But when you ask people to, you just say money, they're thinking dollars. And it's really hard to convince people that Bitcoin is the future of money when that's their frame of reference.
That makes sense. All right. So after the MIT Bitcoin Club, you joined up with IDEO CoLab Ventures, or I believe you helped found IDEO CoLab Ventures. Can you tell me that story?
Yeah, I was very lucky. A couple guys, Joe Gerber and Matt Weiss, were working at IDEO, which is this big, internationally known design firm. They were really the folks that popularized design thinking. They were big in industrial design and then, digital design, services design. They're the ones who developed the initial Apple mouse and the kind of that form factor. And there's a very famous video of them redesigning the shopping cart, things like that. But they wanted to push design earlier in the development of emerging tech. And they happened to choose blockchains as this emerging tech right at the very end of 2014, beginning of 2015. And Joe and Matt had also been at MIT Sloan previously. And so they saw what we were doing there. They reached out and they recruited me to come in as effectively the blockchain subject matter expert for this R&D lab, this collaborative R&D lab called IDEO CoLab. And we were working with folks like Fidelity and NASDAQ and Citigroup. And then we also expanded out and ended up having, folks like Target and Starbucks, others like looking at other things too. But initially it was these financial services firms that were all interested in exploring blockchains and other emerging tech. And that's where I got some experience working with them. They convinced me, because at the time I was looking, I said, I can't focus on anything other than Bitcoin right now. My brain is just like super focused and obsessed here. But looking out in early 2015, I interned at Circle over the previous summer. But looking out, other than, Coinbase, it was hard to come up with any company that I would give more than like a coin flipped chance of being relevant in a few years. But I really believed in the industry. So IDEO seemed like a great place to go, get experience, understand more about product development, see where this technology fit in terms of big companies. And it was fun. I learned a lot. I still use a lot of the skills that I learned during my time at IDEO, but within a couple of years, we were doing what I call kind of corporate blockchain bullshit, right? It was like, we were never going to get out of the innovation labs with the cool stuff that we were doing. We were meeting all these awesome startups. And so some of my colleagues got together and said, let's start a fund. Let's invest. It was like, we're designers. What are we going to do starting a fund? But we really had deep expertise in this particular area. Some of us pooled a little bit of our own money together. We found a family office that agreed to come in and co-invest with us. We did a few investments, then we went to the IDEO leadership, said, hey, we're doing this. Would you like us to do it here, or do we need to go external to do it? And we were very fortunate that Tim Brown and the other leaders at IDEO really embraced what we were doing and supported us both, personally and within the institution, within IDEO itself. And we were able to go out there and raise that first fund. And this was in the kind of like 2018 into 2019. Man, raising that first fund was hard. This was definitely a crypto winter. I think we got to our first close with something like $4 million effective fund size. We had a few, there were some like weird things that could increase it significantly from there. We were like, we got to raise more. We're not going to be able to make this happen. We ended up getting out there, getting it to a $21 million fund, by the second close, but it was tough. Fundraising is not fun for founders, for VCs. Nobody likes fundraising. But we got it there, and we were very fortunate to be able to get involved in a lot of early projects. In that era, it was a lot of fun working with people at a very early stage. IDEO had this kind of brand within Silicon Valley that was separate from crypto, and that was very attractive at the time because there wasn't a lot of kind of legitimacy to the space. It was people who were in it. There were some great crypto native funds kind of getting started around that time. Pantera was already there, Blockchain Capital, Polychain, Multicoin. So there were some really good early funds happening, but they were all new crypto native funds. And so having somebody with a brand to come in was a kind of a powerful validation point, I think, for a lot of the folks that we worked with at the time.
Awesome. Okay. So tell me about going from IDEO CoLab Ventures to forming Nascent, because it seems like you're correct. I mean, IDEO CoLab is an absolute legendary firm in the world, not even Silicon Valley, but globally, and gave a lot of I can never say this word, legitimacy to crypto. And I remember digging into you guys way back in the day, and it was like, wait, why is this incredible design firm involved in crypto? It's really cool. So why did you decide to leave and go found Nascent?
Yeah. So I think, one of the things that was, a factor at the time when we were starting the fund, there was this question in early 2018, are you going to be a closed-ended venture fund or an open-ended hedge fund? We were kind of thinking about like, oh man, this is a consequential decision and this is what we got to think about. And we did the closed-ended venture fund route. But we didn't have as much flexibility. Like we could buy some liquid assets and hold it, but then we had to worry about the kind of limits in terms of the venture capital exemptions from registration, things like that. And I, in particular, got really deep into DeFi, and it was so cool. We were involved. We were in the seed round for InstantApp, and there was an early kind of like futures, perpetual futures AMM called FutureSwap that we were invested in as well. And there was all this cool stuff. I was using Uniswap on a personal level. We invested in some Maker, but then we couldn't use these things within the fund. And it felt like this weird thing where I was like, I was obsessing and I was using it as just like a interested retail user on the side and geeking out about it. But I was seeing all these opportunities, especially, into early 2020. Nascent got started in kind of August of 2020. And so, as DeFi summer was happening, there was all this stuff going on, and I was saying, wow, why can't we participate in this? And so with Nascent, I was very fortunate. My co-founder, Josh, had previously started a high frequency trading firm. He'd sold it to DRW, was a partner there for a number of years. And so he'd also been investing in crypto. He was an early LP in Uniswap and some other places. He was on chain and active, and we'd co-invest in a few deals, but hadn't realized that both of us were actually thinking, hey, the right structure is to do something, at least start with proprietary capital to be really flexible, but the idea being that we want to make long-term investments in this infrastructure that we think is the future. But if this is going to be the future financial system, we should also be using it, right? We can be the early adopters. We can help push it forward, and it keeps us sharp. Also, because then we are the users, and we can tell, is this something that is a meaningful enough advancement over what's currently available in the market that we would use it? If not, then why do we think others who are involved at the time are going to want to use it as well. And Nascent has evolved over time. So now, we touch more markets. We do stuff both on chain and off chain. And that part of our business has really grown. And it just provides so many insights into what we're trying to do on the venture side as well. So it's something where we think to be truly deep and crypto native, it means you can't just write long-term checks, but you also can't just trade short-term. I mean, you can do either of those things, but we think there's so much learning that comes from having an integrated team that's thinking about the market from both perspectives.
Yeah, no, it's funny because the recurring theme within crypto is that you can really develop an actual edge. Everyone's trying to figure out what is their edge within these markets, but an actual edge just by being a power user of the different products, protocols, platforms, etc. And it really does give you very unique and deep insight into what's working, what's needed, what's not needed. So no, I think that makes total sense. So how did you meet Josh? Because this was in 2019. You said that you guys were talking about, or I guess launching Nascent or talking about it
in 2020. So we actually got connected by a mutual friend, Sid Ramesh, who ended up actually coming in and being the first hire at Nascent as well. But he'd been working at Dharma and knew Josh from his work there. He and I had met, I think, at ETH Denver. There were not a lot of people in the ecosystem at the time, and we got connected. And Sid was one of the people I reached out to as I was thinking about this idea of what to do next. And they said, "Oh, well, you should talk to Josh." He'd actually had introduced us previously to invest in some deals together, but I hadn't realized that he wanted to actually go and build something new. I thought he was just saying, "Oh, I'm going to do some angel investing for fun." But he was really serious about going deep. And so one of the fun things is, this was COVID era. And Josh and I had actually never met in person when we decided to start Nascent together. And we actually, I think it was over a year into the life of Nascent before we ever actually met in person.
Wow.
Not something I would generally recommend. I think we both got very lucky. We were able to diligence each other pretty well through a lot of mutual connections as well, and figure this out and understand that we had a very high chance of working well together, and we got into it, and it's gone very well so far.
That's awesome. All right, so how would you describe Nascent's overarching investment philosophy, or maybe like sector focus, if there is one?
Yeah, we try not to focus on like a specific sector. I think we're probably best known for kind of like Ethereum based DeFi is kind of where we've kind of made our name for the most part, but we've gone pretty broad. We've done infrastructure as well. We also invest in things in Cosmos and Solana. So we're not just Ethereum. We're not just DeFi. I think more about where we don't invest than where we do, because generally we are looking for exceptional founders or building things that we think will be category definers or category winners. But we've avoided things like crypto and gaming, and most crypto AI stuff we've avoided as well, and most deep end stuff we've avoided. And in some cases, it's we don't think a specific area makes sense. In some cases, we're really worried about negative selection. So for the crypto and gaming thing, I played a lot of video games growing up. I enjoy games. I think gaming is going to continue to grow as an industry. I think crypto is continuing to grow. I'm sure there will be intersections, but I think what it takes to be successful in that space is really you need to be very good on the game side. And I know how to play games. I don't know how to invest in the companies that are making these games. And there's some very big funds that were raised where they're seeing all of the crypto and gaming deals. And so if I'm seeing a handful here and there, we're not going to be able to choose the winners there. We're probably going to be negatively selected into some of the weaker opportunities there. And so we've just kind of stayed away from that because we don't want to be negatively selected into these deals. Every deal we look at, we say, why are we seeing this deal? Why does Nascent have the opportunity to invest in this round when we know that most of the best deals we end up seeing they're oversubscribed? I think it's really exciting when we see something that's not oversubscribed. Other people don't think it's a great deal, and we see something that we think others are missing. And to me, that's actually where like the greatest thrill comes, when others are passing on it and we're like, no, we see something special here. We want to, put our stamp on this and really help the team get there. But overall, if we don't know why they're taking money from us as opposed to XYZ other funds, then we probably shouldn't be doing the deal, because there's something that we don't understand about it that we're missing. We don't understand how other people are thinking about it. Maybe we aren't thinking about it clearly. So we always ask ourselves that question.
For the deals that you guys identify that are not oversubscribed, that you believe are great, and you get very excited about those, is there a reoccurring theme that you guys have identified to be like, oh my gosh, this deal has these traits that we always get excited about and these other people miss? Like, we can't believe it. This is awesome. Or is it not like that? There's no theme. It's random.
Yeah, I think it's stuff that tends to just be, I would say, weird. And so, or it just doesn't match up with what people are expecting at the time. One of the bets that we made, we led, I don't know if we call it a pre-seed or a seed for Spearbit. And they're amazing. The team is just like absolutely stacked. And other people are saying, okay, this is going to be yet another audit firm. Right? What's going to be special and different here? We said, man, this team is incredible. Our insight was that just security was this hugely underserved area, that there was so much room to build out different things. And at the time when we went in, we were just very clear with them, because we knew everybody else looked at this as a services business. And we talked to them, they said, okay, we don't want invest in services businesses. Like, that's not how you get to venture scale outcomes. We're okay with you starting here, but we need to make sure that we have a mutual understanding that the goal here is not just to build out a services business. It's actually to get started here and then figure out what product, what marketplace, what protocol, what are we going to build that's actually going to scale. And I don't think others had really talked to them about that, and to see if there was an aligned vision and even some ideas as to the directions they wanted to explore. Others were just, I think, dismissing, because they were like, this just looks like a services business, so we don't do services business, so see you later. So I think just asking those extra questions, getting an understanding a little bit deeper can be the difference. But there's not a hard and fast rule where we've seen this.
Okay, going back a little bit, you mentioned that you guys avoid a few subsectors: crypto gaming, crypto AI, deepen. Why crypto AI? I feel like that's been a super hot sector. It's been the belle of the ball for the past, I don't know, call it maybe 6 months, which is a long time in crypto. Before that's kind of meme coins. Is there a reason as to why you guys want to avoid crypto and AI?
Yeah, again, like gaming, I have incredible confidence that AI is changing the world, right? And so, of course, there will be intersections in crypto and AI. A lot of the pitches that we saw just didn't make a ton of sense. They felt like, this is how we'd like things to work, that we want to decentralize all the things, and crypto economics are to make the difference. And we didn't buy that. We think that a lot of the best teams, because AI, outside of crypto is so hot, that if you've got a very straightforward way to raise a lot of money and there's not a need to have the crypto piece in there, that's where a lot of the best AI researchers were going to go do traditional route. They're not going to have a crypto angle to it. Also, because it's been so hyped, the valuations on these rounds that we're seeing were just very high. And maybe that's right, because the opportunity is just larger than any other opportunity that we're looking at. And so they are getting priced appropriately. Nascent doesn't have external LPs. And because we don't have those external LPs, our alternative to any investment we do is holding Bitcoin, holding ETH, staking, yield farming, trading on this. We've got all these other opportunities. And so we're not out there trying to play an AUM game to capture 2 and 20. We're out saying, how do we actually generate the best risk-adjusted returns? And a lot of these AI deals, maybe they're fine if you're trying to deploy hundreds of millions of dollars of other people's money. For us, we're able to meaningfully deploy a $500K check. And so with that $500K check, that lets us get into some earlier, more interesting rounds that we think are priced at a level that gives this room for growth. When something is coming out of the gate at like, 50 to 100 mil, like, and they haven't even really started building yet. Like, okay, like maybe, but we'd rather make a bet on something where we have deep conviction in the team, in the product that they're doing, in the market they're going for, where we feel like we have edge and understanding and being able to help them. Where for a lot of these crypto AI things, for like, we just don't have any unique insight there, and it's priced at a level where we just don't think it makes sense.
DeepIn though, everyone loves DeepIn. You make a piece of hardware, you throw some crypto incentives, and bing, bang, boom.
I'm probably going to scare away some DeepIn deal that we should do in the future by saying this, but I just don't buy DeepIn in most cases. I think what's going on here is it's just an additional step in the Rube Goldberg machine of playing these like pool 2 economics that are totally unsustainable. You've got people who are or ICO type stuff where we're just adding in a hardware component to make it feel more legitimate. It's not the way that you would most efficiently go out building a physical infrastructure network. Is just being like, hey, let individuals decide to like buy these things and go deploy them. You actually can't get like to general coverage in the most efficient way. That way, it's where people choosing to set these things up. There was actually one team, and we're not invested in them. I saw them after, but I think they were called Demo, with the kind of car thing that you plug in and it gives you data on your car. And then there was this network thing. To me, that actually made sense because it works. It provides value to the user in single player mode, right? So even if they don't build out a network, I still can plug this thing in and I can see value from it. And then if other people see value from it, there's actually these awesome network effects that they can get to that's really cool. So that type of thing I love, but stuff where you actually need to build out like this broad base of coverage and stuff, I think that the economics don't fully make sense. You're depending on people doing a lot of speculation, and it's not how I would generally want to see building those things out. I'm not saying they're not going to work. I hope some of them do, but it's an area where we haven't been able to convince ourselves on things that we've seen at the stages that we've seen them, that it's made sense to get involved.
And I imagine Josh comes in handy within the DeepIn world because, I mean, HFT, I assume there was some towers or fiber or something going on, so maybe he has some insight there.
He certainly has some experience and insight in that type of thing. But I think it's a very different game, right? That's like very,
for sure,
very private, optimized, all this, as opposed to trying to like build out these like full public networks. But yeah, and I will say we'll never do a DeepIn deal, right? We may see something where we thought it makes sense. We love the founder. We think they've got this unique edge and access, and like, okay, let's go and do it. But that's the areas where it's kind of been easiest for us to say, hey, these are categories where other people are very excited and they've got very strong theses here. And so they're going to draw the best founders to them. So if somebody who has they planted a flag in one of those verticals and they are getting all the deals and they see something like this is a super special one, even within this area that we invest in heavily, we think these guys are super special. And hey, Dan, we think that you and Nascent would be really helpful to come in here because of your expertise in the DeFi area, in the security area, that you can help out with some of these things. Sure, that is something that we would absolutely look at. But if people are just kind of like randomly going out there and fundraising and it happens to come across our desk, those aren't typically areas that we're going to be spending a lot of time looking at.
Makes sense. All right. So I keep hearing you say founder, team, founder, team, right? It's so important at the early stages that you guys are looking. What is there a recurring theme within the traits of these exceptional founders versus like the merely like good founders?
That's a great question. I think a lot of it just comes to like speed of execution and relentlessness, right? That's been I think the biggest failure mode that I've had as an investor has been getting enamored with an idea. And I think the idea is so great and so cool. And that I kind of like overlook some of the flags in the founder to be like, okay, this person, yes, they found like this clever idea, but they're maybe not like motivated to execute at the relentless pace that is necessary to make this work. And that happens sometimes. Unfortunately, it's good to know like where your blind spots are as an investor and try to adjust for that a little bit. But yeah, I think that relentlessness and honestly, one of the things that I like is founders who are willing to say, I don't know. And there's, I've been doing this now for a while. And so a lot of the pitches that we see, I've seen versions of that type of pitch before. And so I've spent some years thinking about it. I'm thinking broadly about the space, but I'm able to usually come up with some pretty reasonable questions. And what I like is when founders will say, like the best founders will often, they've thought about those questions and they've got an answer. And it may be the answer may be, we don't know, or here's our hypothesis and we're going to test it. And this is what we might find, or this is what else we might find. Those answers I love. What I really don't like is when I ask a question that I think is, based on me going broad, having some context, asking a question, the founder presenting as if they have a certainty on the answer, where I'm like, no, there's some stuff that you haven't thought about here and you're just doing this. Sometimes they convince me, like some of the best founders have then convinced me that I'm wrong about things. I'm like, okay, great. I love that. Convince me that I'm wrong. You're spending all day on this. It's one of, 100 different things that I'm looking at. So I think that intellectual honesty and the understanding that this is a journey and you can't have all the answers up front. And one founder I've worked with, more recently that I would say was exceptional in this was Guy Young from Ethena. We'd actually had invested in a previous version of a stablecoin, trying to do this kind of carry trade stablecoin called Lemma Finance. And they were trying to do it all on chain at a time where there weren't liquid enough perp dexes to really make it work and scale it. And so Guy's insight was like, oh, we actually need to tap into the liquidity on the centralized exchanges. Here's the trade-offs we're going to make. But he was very open and honest about the things that they didn't know. And they were like, here's our hypothesis. If we can do this, these are the trade-offs to make. Here's who we need to get on board. Here are the first things we need to knock down in terms of adoption and usage and why the sexes should actually love this and start to use it as collateral there. And that opens up some other opportunities. And he could see multiple steps ahead, but he also was very clear on like, yeah, we don't know on certain things. How are we going to decentralize certain parts of this more and more over time? How do we provide more transparency? He was thinking about these. He didn't posture like he had all the answers, but he had very thoughtful responses to every single question that we came up with. And that's really what we want, is people who are thoughtful. They know what they know. They know what their unique insights are. They know what their hypotheses are, but they know that there's a lot of stuff they don't know yet. And they're going to come up with reasonable ways to go and try to find out the answers.
So that trait can be relatively assessed through exposure, through conversations, and just talking to them and learning their thoughts and theses. But what about traits like you mentioned, like relentlessness and speed and ambition, drive? Are you looking at their past history to be like, do they show a historically, do they show ambition, or how are you assessing these harder to, you can't just assess drive over our conversation.
Yes and no, right? So, to some degree you can, but also very much you're looking at like kind of behavioral interviews and context, right? You got to do the reference checks. You got to talk to the people they've worked with, understands like they must really have this kind of like burning drive. And I think it's also the traits that have been necessary to be successful as a crypto founder have evolved over the years, right? And we historically have been very drawn to deep technical founders. And that has been something that like early on in crypto, deep technical founders, like those are who you wanted to back, right? And I think we're getting to the stage now where there are absolutely some really cool technical things that are being done, especially in the kind of ZK space, that we're like, yes, you really need some deep technical knowledge to be successful there. But so much now is a lot of it's about distribution and it's about go to market. And so we're more looking for folks who like we think are credible and they can do the technical stuff. But the differentiation for a lot of teams today is, what is your distribution strategy? How are you going to market? And that's something now that we're looking at a lot more.
So I guess talking about that, it's funny. Well, one of the fears I have about just crypto in general is that I say this like on every single pod, but Venmo and JP Morgan or Chase are going to end up winning crypto because they have this just massive distribution. And in theory, they'll just pick up the best products and protocols and plug them in to their front ends. And so I'm like, man, is crypto even going to win? Because it's going to be just Chase Bank like interface or whatever, and Chase the company who's going to plug in like Uniswap or whatever. And that kind of scares me. But in terms of this distribution edge, yeah, I mean, distribution is king. It's literally everything. How are you able to identify the founders with good distribution? Because it's not just like, oh, you have a lot of followers on Twitter. Like, what are these other factors that you're looking at to be like, oh my gosh, insane founder, great market, great product. The distribution sucks. Like, how can we push that distribution angle? Like, how are you looking at that?
Yeah, I think they just need to have a plan, right? They need to be like very thoughtful about like, how are they going to do it? What is their edge going to be? It can't just be, oh, we're going to like give out a lot of incentives, right? It's like, well, that can work. That can be a good bootstrapping thing, but like everyone's trying that. So what is the wedge market that you're going for first to get started? And that's something that, we're seeing. One of the areas that we've actually invested in recently has been some of these, what I'll call crypto native neobanks. And I think that that's something that we're very excited about. Going back to, why I got into crypto in the first place, right? It is massively expansionary in terms of financial inclusion and the possibilities there. We've seen, I think at least the last 2 cycles, we've seen this emergence of folks trying to create, or at least last cycle, right? We saw the emergence of these kind of like high yield savings opportunities. And some of them were using, Luna, and like, yikes, that didn't work out so well. But for a lot of people, I think the idea of just like dollar savings and yield is a very compelling product globally to have. It's a really tough one to go to market with. And so we've backed a number of teams, and we'll haven't announced them yet, but I think starting on the credit side, and looking at specific markets, whether they're emerging markets or kind of niche markets within the US, I think that's a much more interesting starting point than going straight for high yield savings. And especially it scares people if you offer yields that are too high relative to what they're expecting. So going and providing some sort of differentiated value on a credit product, we think is a really interesting starting point. And we've backed a few other teams that I think have had a similar insight and are building out some really cool products that we're going to be excited to start shouting from the mountaintops as they announce their funding and as some of them come to market.
Very cool. All right. So how are you looking at token-based protocols versus equity? Or do you like to have a mixture of equity and token?
We try to get involved so early that, we are getting exposure to both. Sometimes it's very obvious this is going to be a token-based protocol. Sometimes it's obvious it's going to be an equity-based business, but the answer is we don't always know. So we want to be aligned with the founder and have exposure to both. We try not to push founders on go token early, get it out there as soon as possible. I think that's actually really harmful to long-term success. In some cases, you do need a token out there early, but I think in a lot of cases, you just end up regretting getting the token out there as soon as possible, because you now have this kind of public price that's affecting your psychology as a founder. It's affecting your team. It's affecting your investors, affecting everybody. And people are talking about it. And you want the folks to be on the product, and you want to find product market fit that's not, you're not getting distracted and getting bad data because you're distorting everything with incentives. And it can be hard because people assume there's going to be a token for a lot of products, even if you haven't said there's going to be a token. And so they're pre-farming airdrops and stuff like that. As much as possible, though, I think you want to stay away from making that a focal point of what you're doing early on. So yes, we want both, but we want it to fit the product, service, company, organization, project, however you want to describe it. There needs to be the right fit in terms of what the value capture mechanism is going to be. And we want to help the founder figure that out when the time is right, not make it the be all end all of the investment decision.
Yeah. So on that value capture mechanism, what is the ideal value capture mechanism? Is it just, hey, we're going to we're going to charge a fee, we're going to buy back and burn our token, or, we're going to send literally, the fees directly to the token holders, or, like what is, in your opinion, the optimal, and maybe there is none because they're all different products. What is the ideal token structure?
I think to some degree, it doesn't matter. And I think, when you were talking with Hasib, he I think had a similar take here, which I agree with, which is it's you don't talk about that early in the process, right? If you are actually out there and your protocol is creating value, then you'll be able to capture some of it. And it's not going to be the hard part to figure out what the right mechanism is to capture some of that value you're creating. The hard part is creating that value in the first place. So let's go out there, let's create a lot of value, and then I'm confident that we'll be able to figure out what the right mechanism is down the road. But focusing on this too early, it's like you're really putting the cart before the horse there.
Do you foresee a future where there's going to be traditional companies, like, we'll call it companies trading, publicly traded companies in the S&P, for example, will they ever be launching tokens, for some incentive mechanism design or, some other process, but still retain their equity? Because of course, their equity is going to all be tokenized on blockchains at some point. But I'm talking like a crypto native token that is used for some incentive behavior.
I won't say we're never going to see it. I don't think it'll be like a super common thing. I think it's tough when you've got a business that captures value through equity and then you also the token. It's tough. I think for a lot of teams, they're trying to make a decision as to what is the right vehicle for value capture. And I really like the approach, for example, Morpho is taken with the Morpho Association, where they've dissolved the labs entity. So there's not the question of are the equity holders going to profit over here at the expense of the token holders? I think you want to be pretty clear about if you're going to have a dual structure long-term, what the division is. It gets really messy if you're not. I don't think a lot of Fortune 500s will do this. Then again, I never thought that we would see a president-elect launch a meme coin. So who knows? It's really hard to predict how things will change in the future. I do think that there was a great tweet from Jacob over at Zora a few weeks ago that I saw that was making the point that just like social media did not become more like traditional media ended up becoming more like social media. We're going to see the same thing within traditional finance and crypto, where crypto is not becoming more like TradFi. TradFi is actually becoming more like crypto. I think that's absolutely happening. So as we're kind of dragging the traditional financial system more towards crypto, maybe we will start to see Fortune 500 companies launching their own tokens. But to me, it isn't the most obvious thing to happen. As you said, I think it's much more likely that we do see tokenized forms of equity that, I would love for us to have frameworks to make that a widespread thing.
Yeah. What are your thoughts on tokenized equity? Because, on some hand, it's almost, it's very exciting. On the other hand, it's extremely boring because it's it's going to make everything very efficient and transparent and just improve the financial system in many ways. But in terms of kind of the 0 to 1 crypto thesis of, hey, we're going to make everything 100 times better, it's not really going to do that, in my opinion. It's kind of a good improvement, but nothing crazy. What are your thoughts on tokenized equity?
On one hand, I'd love to see it. On the other hand, I feel like it's really tough to see that becoming widespread. To your point, it isn't that 10x improvements for most people. Most of the case I see for it is okay, for people in parts of the world where they don't have as much direct access to US equity markets, that this will be an attractive product. Okay. I think the big stumbling block for me has been around the concerns that regulators will have, right? It's okay, we've got these tokens, we're working on better disclosures, and hopefully SEC starting to put out a reasonable framework, finally, from Hester Fierce. Thank you. So I love seeing that. But when you think about insider trading, the idea that you're going to be able to buy and sell shares in a specific company in a pseudonymous manner where there is not necessarily KYC, the amount of insider trading possibilities and not being able to go to the brokerage firm and kind of get information and do this investigation, it just feels like the kind of thing that if the SEC is going to come down anywhere, they're just really not going to be happy with more easily enabling insider trading on big public US companies. So I think that's even if, and I've seen some teams where they've got some really clever legal frameworks laid out for how they're doing this. I'm like, that's cool. That's great. You know, they're actually, the regulators are going to find some way if this starts to become a big thing. They're not going to be okay. They're going to change the rules. They're going to find some way to stop it. Because it just looks so bad across all of our kind of like public markets if that becomes a big thing. So my sense has been that that's something that, because there's nobody, or there's not a big enough user base with a burning desire, burning need for it, the way there has been for US dollar stablecoins, there's not going to be that kind of demand side pull where the supply side is just going to show up to meet it. People want it to be a thing, but I think it's more problematic for the reasons that I've laid out.
Yeah. So in this world of greater regulation, wouldn't you imagine the total universe of crypto shrinks dramatically? And I'm not talking about like the millions of meme coins that are launched per day. I'm talking about the actual projects. Just by implementing some barriers, by not making it totally open and free, which, there's pros and cons, of course. But wouldn't you imagine the total market of crypto shrinks by 50%, if not more?
No, I think it's we're still so early in the journey, right? And you mentioned like, oh, am I worried about like JP Morgan, like Chase kind of coming in and like they've got the front end interface? No. If there's DeFi on the back end, great, I love it, right? I think the stuff that we saw with like Coinbase and Morpho is just like the tip of the iceberg. I think we're going to see a lot more kind of traditional finance companies start to kind of pull in DeFi backends. And they're going to want this. Some of them may want more kind of like whitelisted, slightly permissioned things where they bring in some element of KYC for at least one side of the market. Okay, I still think that there's going to be, because we do have this permissionless infrastructure out there, there are going to be versions out there that will stay completely permissionless. And there'll be firms like Nascent and others who they can play in both worlds and are able to effectively economically like kind of bridge some of these permissioned and permissionless systems. So I do think there's going to be a lot of growth here. And I'm somebody who is like very philosophically anti-KYC. I think it does so much more harm than good. And so we've really tried to stay away from investing in things that kind of assume that all of DeFi, everything is going to be like KYC'd. I'm now open to that. There are some participants, some use cases where like there's going to be some KYC, and we just need to make sure that like that doesn't take over everything and wipe out the non-KYC portion. Because I do think on like a human rights basis, everybody should be able to access this permissionless infrastructure, because this is global infrastructure. Why should like say like the US dictate the rules on what people must provide to be able to use these things? So I think it has to be out there, but there will be folks like JP Morgan and others. So like they'll come into like, we need to have some kind of permissioning on this, some element of KYC or something that's happening here for at least the pools that we're touching. Okay, that will exist. And I think that the DeFi protocols and infrastructure that wins is going to be able to play and serve both markets.
Very interesting. Okay, so also, you mentioned earlier you're excited about these kind of neobanks. So, and with what we're talking about now is how these companies are going to plug in these different protocols. How do you foresee the future of that playing out on a broad scale? Is it going to be like actually Chase is going to have connection to Morpho and all these other, applications, and people will deploy, their funds into different pools and different strategies and whatnot, or I guess like, and you're also actively investing here. So I guess don't reveal too much alpha, but like, what can you talk about that you're really excited about within that realm?
Yeah, I think the ones that are specifically like US banks, they're going to have the hardest time because they're under the most stringent kind of regulations. So I think more like the Robin Hoods of the world, right? The Revoluts, folks like that, they are going to have, I think, more of an opportunity to play here. Incredible distribution partners for teams that can partner with them. They're also potentially like threats. You got to be very, very careful, approach with caution. But I think the same way that, these fintech companies have emerged and they've grown and been able to compete with traditional banks in some ways. I think you need to grow if you're going to be a kind of a crypto native like neobank. You need to grow, and you're actually playing more of the fintech game in terms of like customer acquisition, thinking about your CAC, thinking about your LTV. Like you need to have that mindset because you're not just building a protocol where we can get a few thousand power users and like that will drive us to like billions in like TVL. Like that's not the game. It's like, no, you need to get hundreds of thousands, millions, tens of millions of users. And if you don't have like the skills to go out there and do that, then I think you're going to have a rough time. But there is room for those who are able to be early and nimble, as there are for startups in every sector, right? If you can move fast and you can provide a differentiated value proposition early on, find that wedge market, grow it, expand from there. I think there's a lot of room, but that window is going to close or get a lot harder at some points because there are those kind of nimble fintech companies that sit between TradFi and like full crypto native. And so I think those in some ways are the bigger threat are those existing large fintechs.
Very cool. Wow. That's really interesting to think about. I want to do some ChatGPT after this and try to fish to see what's going on within that fintech realm, but very, very exciting. All right. So I want to switch gears here a little bit, but within the venture process, venture is extremely not scalable and kind of inefficient on purpose. But if you could have a magic wand that could improve one process within the venture flow, we'll call it, what would that be?
You mean for me and Nascent, or just like generally?
Just like, for example, for you and your investing process, like you have to source, then you have to diligence, then you have to monitor, and then you exit. Like, and within that, each one of those categories, there's 50 different items that you're processing. For example, I would love to wave my magic wand and create a very efficient way to source deals, or to kind of have them all in one area, share them easy. Just like if we're doing make believe here, like what is your magic wand? If you had that power to fix one process within the venture flow, what would that be?
Yeah, I mean, I think it would probably be, I would want every founder when they're just getting started to call me first, right? That would be like the magic thing to have happen. So I think, yeah, absolutely. Better sourcing. I think, we see a very high percentage of the deals that we would want to be seeing already. There's always ones that slip through the cracks, and we'd like that not to happen. I think we're relatively good at assessing deals that come in front of us. We all have our anti-portfolio of things that we passed on that we really wish we hadn't passed on in retrospect. I think, stuff that we can do to help support our portfolio companies better. Like if there was a way to magically like scale some of the one-to-one support and attention that we could give all of them, we would love to do that. Make sure that they're all absolute top of mind at every moment. And then, I'd say that, those are certainly areas that we would love to improve our systems and our tools to make sure we're getting better.
Do you think that AI could play a role within that sourcing equation in the sense of, hey, founder AI goes out and pitches my nascent firm AI to ingest that deal, and it'll tell me whether or not it's a relative fit? Yeah,
potentially. I mean, I think that's like we're all using agents to kind of like interact with each other. Like maybe that will be the future. I think Delphi built out a pretty cool thing where you can kind of like go and virtually pitch them and they'll assess it. Actually, HF0, the Bay Area Accelerator, they pretty elite. They get about 12 teams per cohort that they do twice a year. And they recently published a thread about how they actually took the thousands of rejected applications, ran them through this kind of like AI assessment, invited some of those to come in and actually had like a 50% hit rate. It's like from the rejected applications that the partners had said they didn't want to go through, they got to invite 6 to the final round interviews. 3 of them made it through to the cohort, which was a better hit rate than any of their GPs. And it was just out of the rejected pool that they had then sourced them. So like clearly there is room to do a better job selecting using AI tools, at least for certain types of things at certain stages. But I guess I'm of the opinion that anything that, requires kind of like intelligence, like intellectual rigor and stuff, like AI is going to be better than all of us at like basically everything within the next few years. So yeah, absolutely. Like AI is going to be super relevant here. It's something we actively work on at Nascent, like across the entire organization, making sure that we're fully embracing and staying at the cutting edge of what AI capabilities are today. And I think that anybody who's not embracing AI and whatever they're doing is at real risk of getting left behind. So we're absolutely exploring that. I don't know if we'll take that form of like the agentic interactions like first, but that does seem very likely like the direction that we're headed to some degree.
So crypto is a very multifaceted ecosystem where, you have to be kind of a little bit of a, I don't want to say expert, but knowledgeable about many different domains because they all weirdly interact within crypto. So building off that, how do you think about team creation at Nascent? Because, are you looking at, okay, we want very, very crypto native people that were in the DeFi trenches. We want people that were at Goldman and TradFi, some mixture, like, I have no idea, but what are you looking for when you're building out your team?
I mean, it totally depends on the different roles, right? We've got, early on, we value just like being crypto native super high. And like everybody we hired was like deep crypto native. But as we've grown, like you need some people who like, they just nerd out on like certain like engineering things and they have to be like open to crypto. But like there's a lot of stuff that, on kind of trading systems and developing our backends and things like that, where it's like, they don't need to be deep on crypto. We want just like exceptional engineers for that. For our operations team, everyone's at least crypto curious, and, played around with some stuff themselves to like be knowledgeable about like, what we're doing here all day. But yeah, we don't require that everybody be deep crypto native. I think what we have found that is most important when we look at not just who we want to hire for, but we look at like the top performers across every functional area at Nascent. There's this element of like hunger to learn that everybody is doing this with, like exploring, whether it's operations or engineering or trading or investing. The kind of universal thing that we see across all top performers has been like people are like researching and playing around and like reading about this stuff in their spare time. And they would do that even if they weren't working at Nascent and needed to do it for their job. They're just like very curious people who get obsessed by their area. Our head of talent and strategy, she's reading about like best practices in like org design and talent management and stuff, like in her spare time, because she nerds out about that stuff. And so I think that's what it takes to be really successful at Nascent. But I think also the people who are nerdy about what they're working on tend to be successful in most organizations. But we really have that as a core component of our culture at Nascent.
All right. So 10 years from today, you're back in the pod. Where is Nascent?
10 years from today, you're probably talking to like my AI avatar instead of I don't know, right? And that's one of the reasons why we've kept Nascent, kind of like privately held and being able to do things like that, because we don't know what it will need to look like 10 years from now. And so we don't want to make, promises, commitments to like external capital providers around that, because we just don't know. We want to stay nimble. We want to be able to move fast and evolve at the pace of the industry, crypto specifically, although now I would say the pace of AI is even outstripping the pace of crypto. So we just need to stay nimble. I'm sure we will still be deeply involved in crypto in a variety of ways. I think that crypto and traditional markets are intersecting more and more. And so we need to like play along those intersections. But my strong belief is whatever Nascent looks like in 10 years, whatever crypto looks like in 10 years, we're going to be pushing on the edges and playing with the things and using them ourselves in very real ways with like real capital behind it to give us that deep understanding of what's next. That's why we chose like Nascent as our name. If it's not kind of like early and emerging, and that's not an area that we're playing in deeply, then we've lost our path. And so that's a constant reminder to us to always stay on that cutting edge.
Very cool. Dan, this has been amazing. It's time for the closing questions.
Let's do it.
Alrighty. What's the best advice you've ever received?
This is going to sound so, I don't know, tech throwy. I hate this, but like one of the things that the piece of advice was actually from a book from Tim Ferriss's 4-Hour Work Week. And I read that in my mid 20s, and it just stuck with me. It's the idea of like, you should pursue your dreams. And like a lot of people don't pursue the thing that they want because they're afraid of failing and like what would happen if they fail. But the advice that he gives in this book is, well, game out the worst case scenario. What if that failure happened? How would you recover from that? What are the steps that you would take to come back? And what you realize in doing that is like, actually, it's not the end. It's like you can recover from that. And so if you can recover, even if the worst case outcome happens, then why not take the swing and do the thing that you're dreaming of that you really want to do? And that has stuck with me. Led to me quitting my job at 25 and buying a one-way ticket to Thailand and spending the better part of a year kind of backpacking, exploring. And that's what, brought me to East Africa and learning about M-Pesa and Bitcoin and all this stuff. So it's like, just go take the opportunities that are in front of you, that you go hard after your dream. You may fail, but just go for it anyway. And I think that's been very relevant advice that's served me well. But I think just that thought process is super valuable.
And so you attribute that directly to that book and to that kind of theory there.
Yeah, I think it was something that I don't know why that was the piece of that book that stuck with me, but that be like, hey, just like actually don't let yourself have this nebulous fear. Make it specific. Like, what are you specifically afraid of? And then think about, okay, if that actually happened, how bad would it be? How would I recover from that? And I think in almost every case, you realize like taking the nebulous and making it specific, you can find a way to deal with that. You can find a way to cope with it, recover from it, come back and move forward.
That's awesome. Love that. All right. Looking back at your time in this space, what's the biggest thing that you've changed your mind about?
Well, I think I mentioned earlier, just like being a kind of Bitcoin maxi early on and just like being like, it's all gonna be on Bitcoin. That's definitely something that has changed. So yeah, I think there's always room for new innovation, for new stuff to happen. And I think anytime I think something is stupid or that other people are getting hyped about, I want to double tap on that and be like, okay, maybe I still think it's stupid, but I need to at least understand why other people are excited so that I can reassess my priors, should new information emerge.
That's great. All right. How has being a entrepreneur / fund manager changed you as a person?
That's a great question. I don't know. It's very hard. I think it's something that has become deeply part of my identity, hopefully to a healthy degree, maybe not. But I do have a family also. And I think, making sure that I carve out time for my family, for my kids as well, like that's really important. And so I try to make sure I balance that. But I think because this industry and the job can be so all consuming, you have to make sure that you're being very intentional about carving out time for things that are not just like being on crypto Twitter and reading white papers and networking all the time. You like have to make that time to take care of yourself and your family as well.
All right. What's your most contrarian opinion about crypto?
Ooh, I think it's probably around that crypto AI front, that crypto is not the big unlock for AI, and also that AI is not the big unlock for crypto. I think there will be intersections, but I don't think that either is going to be the dependency for the others in the way that some people believe.
I second that. I think one way to that I came to that conclusion, or thesis at least, is that all the crypto people talk about AI and the AI people do not talk about crypto. So I was like, okay, well, clearly there's some sort of mismatch here, but very, very cool. All right, last one. What does success look like for you?
Success, I think it's going to be very individual. I mean, for me, I feel successful already in that I get to, and I have gotten to do this for the better part of the last decade, is like wake up and work in an industry that I'm so excited to be a part of. I'm so excited about where it's heading in the future. I get to spend most of my day talking to other very smart people who are working on like crazy awesome things and trying to find ways to support them on their journey. So I think that like kind of sense of purpose in how you spend your days is something that most people in this world don't get to have for what they're doing. And so I already feel that I'm successful in that perspective. Obviously, we'd all like to have more impact in our individual work. We'd all like to make more money. We'd all like to spend more time with our loved ones. So these are all things that, I'm continuing to push forward on, but I already feel like for some of the most important stuff that I could hope to be successful on, I feel very fortunate to be able to say for a while, even before some of these other like numbers and metrics may show up, I already feel like my day-to-day is a huge success that I get to spend time on the things I spend time on.
Amazing. Dan, thank you for coming on. This has been incredible. Where can people find more about yourself and learn more about Nascent?
Yeah, they can find us on Twitter, on X, at Elitzer, at NascentXYZ. We're also Nascent.xyz. So you can find some of my writings and our portfolio and information about Nascent there.
Amazing. Thank you, Dan.
Thanks, Andrew.